This is our Forex blog for October 11th, 2011. And like most days, we really want to buy the strong currencies versus the weak. Yesterday, the euro and Australian were strong, and the dollar and the yen were weak. Today, it's pretty much the opposite for the most part on the dollar and the yen. You can see the real-time strength here, the intermediate time frame strength, the daily and weekly trend is still down because of how much yesterday was, but the monthly trend's up. So it's really hard to trade on days like this, because when you see some strength followed by very little amount of weakness, normally the strength returns, especially when all the longer time frame trends line up. It's pretty much a no-brainer. On days like this, when the weekly and the daily trend are down, you don't know how long that strength will come back. In this case, it was only for half an hour. Then you had about just a tiny amount of weakness and mild strength for a little bit. Then the strength came back. Then you had weakness. So days like this are quite a bit harder to trade. The euro had some weakness throughout the day. Earlier today, it was quite strong from 1 to about 3. And because of the strength yesterday, it was pretty much a no-brainer to buy it during that time. But you'd want to buy it versus some of the pairs that are, the weakest, like the CAD. The CAD is weak on all time frames. The euro is strong on all time frames. So this, let me find the euro CAD. Here's the euro CAD 6 pips per bar chart. Earlier today, euro was strong, the CAD was weak, and you can see it shot up, close to 60 pips. When you get a pullback and it has less weakness and strength, you want to buy that. But when it goes back up and you don't see the strength come in, you got to get out with a small profit. Previous day's high is a resistance area. Once broken, it tends to become support. So the fact that it went back underneath it, came back up to the monthly and weekly pivot levels here, broke down again and couldn't get up there. You can see the strength that was there before has all but disappeared. And there's pretty high probability counter trend trades when you find strength dissipating and you have, basically a 1, 2, 3 pattern up at the high here, like this one. But earlier in the day, the euro was strong, the CAD was weak, and it was a very high probability trade. If you're going to trade the dollar or the yen, because both of them had strength today, do the one that has, the highest peak. Here you have a lot of strength, followed by very little weakness. That strength's likely to come back, which it did, but it is only for half an hour. 6 o'clock here is a decent trade. The Swiss was one of the weakest ones. So, from 5:30 to 6, you're looking to buy the dollar Swiss. Here's that chart. Here's from 5:30. You got a little bit of a pullback, and this thing just exploded up. You can see it went up about 80 pips. And we're going to do that bar by bar analysis in our regular class. Now the Swiss is not a bad trade, because the weekly and monthly trend are down. The dollar's weekly trend is down quite substantially because of the last 2 weeks, but the monthly trend's still up. So when you have incredible strength like the dollar has here and the weakness in the Swiss, you can see that the extreme weakness came in here around 520, 525, giving you plenty of time to get into the second wave of this trade. Actually, I take that back. It would have been on this bar. On a range bar chart, you might have bought the break out of that. When currencies are above the hourly, they tend to go up. And like we always say, usually when the market hits the upper containment band, the white one, it runs out of steam. So if you see a double top near the upper containment bands, usually you can look for a counter trend trade, just like you had in the euro dollar as well. And when it finally breaks down underneath the sideways, pattern, it's usually a pretty high probability trade, and probably 70% of the time over the next 3 to 5 hours it works its way back to the hourly. So you know ahead of time what your most likely profit target is. It's about 63 here. So you have a very good chance of making 35 pips while risking 10. And that's really the only secret of trading. Yesterday was an easy slam dunk day. Today is a little bit harder. We have a very strong pound. The CAD was extremely weak on most time frames here, so you could have bought the pound CAD. You can see the weakness kind of fell off, and it was just mildly weak. But regardless, even when one currency is super strong and the other one's just mildly weak, it's still going to go up. So let's bring up pound CAD chart. This is not one that we typically go over in class, but you'll be able to see a nice, tradable uptrend from about 2 to 7 o'clock. Here's 2 o'clock. A lot of times you miss the first, move up, which in this case isn't that much. It pulls back. You have a nice little flag pattern right here, and you also know, drawing your fibs on here, where the next likely profit target is. If it goes through the first fib target, it usually stops at 1.618. So you're in that trade at the whole number, and you're at around somewhere between 20 and 35. Again, you're risking 10 pips most of the time and making 2 to 3 times more than that when the trades work. So you don't have to be perfect in trading, and that's what's really beautiful about it. The Swiss also was quite weak on almost all time frames. Let's bring that up as well. From about 2 to 7. Strong pound, weak Swiss. And you can see in this one, it broke out and made a higher high, pulled back. I really like pullbacks. This one kind of just chopped around here, so you would have been out of that trade with a small profit. And then when it broke out right here over the high, you'd be in that trade. If you really don't want to let the noise of the market stop you out, you put your stop underneath here. And as soon as it goes up and kind of chops around, it's either going to continue or stop you out. So there's no reason to have that wide of a stop. And then it just takes off and keeps going. And if you add the FX Trend Pro to this chart, it'll really let you know whether to stay with that trade or not. This is what we use for the currency meter. It's made up of 5 different statistical trend tools. So if you scroll back and look at this trade here, it broke out. First of all, there's very little weakness, and the peaks on the up moves are more than the peaks on the down moves. If you get into a trade and it takes off and you see plus 80 strength, you might, at this point right here, you don't know if it's going to continue or not. You never do. We don't have the support resistance areas on this chart too, but you've already locked in about 50 pips of profit. So you might want to exit the first half if it goes sideways here and doesn't look like it's going up, and move your stop underneath those lows. Keep moving your stop up, and you get stopped out right here. So this was absolutely huge, almost 100 pip move. Some of your trades are going to be small, 5 to 10 pip wins, and you're going to occasionally catch the much bigger win as well. The New Zealand here is pretty much weak on all time frames today. When you have how you want to use this is you want to find moves of plus or minus 80. Hopefully those are in the direction of the most of the longer term levels, and then wait for a tiny amount of strength. There was extreme strength for 1 5-minute period, then that fell off. So 7:30 to 8, you're actually looking to sell the New Zealand against whatever's strongest. And between the dollar and the yen, you definitely would go with the, actually you would be going with the dollar, because it just peaked with extreme strength here at about 7.55. So the New Zealand dollar coming up to 8 o'clock, you want to look to sell it. Weak Australian, strong dollar. It's underneath the hourly here, and you have this pullback right here. If you use our intelligent trailing stops, it has you short here at 93 and out at 76 for a very small 15 pip profit. But 10 pips a day doubles your account every 2 months. And to end class today, notice the very strong euro on all time frames. The pound is now strong. The yen is the weaker of the dollar. So you have the euro yen to buy, and also the euro pound to buy. This is one of my favorite trades. When a currency's weak, it's typically underneath the hourly. You never know if a breakout from below to above the hourly is going to continue or not. But what typically is probably an 80% probability trade is when you have a breakout from below to above it, you get what I like to call a retest of, this is a resistance area. Once broken, it becomes support. The fact that there's buyers here at the hourly, when it goes above this area here, you want to buy, especially when you have momentum on the way up, very little weakness on the down move. And when you get into this trade, as it's going up, you see a lot of strength, and then it falls off a little bit, it comes back. And right here you can see a little bit of weakness coming in. You might want to exit your trade somewhere up here. but you made, about 15 to 20 pips with a very high percentage winning trade. This is, probably going to work no less than 60% of the time some weeks, and as high as 80% of the time the rest of the time. Let's see if on the same chart we can get an exact pattern the opposite way. Notice when it broke above the hourly here, it went back underneath it. And this one came back down underneath the hourly, then it acted as resistance. This is the exact same pattern on the opposite side. When the hourly is broken and then it can't get back above it, it typically goes down. And you can see this one fell from around 50 all the way down here to 12. Fell 40 pips. So even if you made half of that, you made 20 pips on that trade. I would have exited half my trade here when it went sideways. And, this is a major resistance area and the market didn't go through it.